Everybody, Scott Sachs with the Synergy Group here with our monthly snapshot of what's going on in the marketplace. Again, these are April 2024 numbers looking at year-over-year statistical comparison to 2023. And like always, we're comparing Montgomery County, Arlington County, and Washington, D.C. As we know, supply has been very constrained over the last 6 months in particular. But as you can see, active listings, Montgomery County, up 21% over a year ago. Now again, this is month to month, so it does fluctuate. So these numbers are accurate to an extent, but it does show that we are starting to see a little bit of an uptick in the amount of inventory in Montgomery County. Arlington County, still down 2.89%. Just so for relative comparison, when we were having these reports done 2 and 3 months ago, these were down 20 and 30% as far as the amount of inventory. That's a 50 basis point change, that's 50 percentage point change in the amount of inventory that's getting freed up in some of these markets, which can lead to price stability. We're not there. But Arlington is down 2.8%. Washington, D.C. up 21.81% as far as total supply. Again, the story in Washington, D.C. in particular is very hyper-local. It's very nuanced as far as neighborhood to neighborhood. There are still neighborhoods in D.C. that have lost value year over year and are continuing to lose value year over year. There are other areas where you're still seeing multiple bid scenarios. So working with that professional to get into that market and understand it very specifically and where it's trending is all the difference in the world. Average price across all jurisdictions. Montgomery County, 9.31% increase year over year. Arlington County, 9% increase year over year. And Washington, D.C., up 6.35% year over year. Then we go to cash deals, right? So the average 30-year mortgage right now is 7.6%. Cash deals across all jurisdictions is really high. Montgomery County, 23.9%. Arlington, 33.7% of the deals were cash. And in DC, 20.2% of the deals were cash. Now, this can take on the form of a lot of things. We've done deals where parents bought the house cash for the kids. We have LLCs that are investments, arms that are buying these cash through institutional money. There are a lot of ways that cash is showing up, but it's showing up because the only way these deals are making sense for a lot of people is to avoid the 7+ handle interest rate on how these are structured. So just know from a competitive standpoint, there's almost 25 to 30% cash deals across a lot of these jurisdictions, which is a huge number right now. Now, here's the exercise I want to walk you through. I want to show you, okay, if I bought a house in Montgomery County, Arlington County, because they're roughly about 9% appreciation year over year, but look at the interest rate comparison. Today, the 30-year average mortgage based off bank rate is 7.6%. The 2023 rate this same day a year ago was 6.39%. So in this scenario, I just said, okay, let's assume we had an $800,000 house, 20% down, taking our rates, which assumes a 20% down conventional mortgage. Your comparison is an $800,000 house would have been $160,000 down payment versus today that same $800,000 house is trading for $872,000, which is $175,000 roughly down. The payment today at 7.6% is almost $5,000 a month. And this is just principal and interest. It doesn't factor in taxes and insurance. So that number is going to be higher than that. But this gives you a just apples to apples principal interest as far as how the loan is amortized. The actual delta on that is $944.80 a month. You're paying $12,000 a year more now for a house than you did a year ago for the same house, just based off the interest rate change and the appreciation. You're also bringing $14,000 plus more in cash to the deal for your down payment and the increase in the amount. There's a reason why renting is cheaper in all 50 of the major US markets in the country right now. Anywhere from a 12 to 37% disparity between the cost of buying and the cost of renting. Why do I bring all this up? Why am I going on? Scott, what are you doing with your life? Because It all matters. And we're paying attention to the things that matter. And we're trying to find the canaries in the coal mine to be able to advise our clients and our investors and our sellers of what is the best action forward to make sure you're making smart financial decisions. If we're seeing inventory start to rise, if we're still getting input from the inflation numbers that it's hot, which it was just revised as of today, even hotter than they anticipated, that means rates are higher for longer. That means as we start to see more inventory and the cash deals start to go away because they've deployed a lot of the capital, there's an opportunity for prices to stabilize. So what does that mean? It means you gotta be patient in a market like this. With limited supply, people are still, in certain markets particularly, active in competitive bids. We have 2 listings today, one of which is getting multiple offers on it, and it's escalating 10% above the list price. That is not uncommon in a market like this. So you want to be patient. You want to make sure you're working with a real estate advisor who knows the market very well and is looking at the data that's out there, because it does tell a story of where we might be headed. And knowing that and be able to plan around that can be the difference between being stuck in a home for 20 years or having the financial freedom to make the decisions you want moving forward. SynergySoldIt.com to get all of this information and more on a monthly basis, or reach out to us for an individual consultation.